Okay, guys. So if you pay attention to so please mute your mics. So if you pay attention to what I was trying to say, let me give you a pictorial representation of what I'm trying to say. So for example, we have something like this, right? The origin of a trade has actually started. We have a sweep, we have a break, we have internal range liquidity, right? So pay attention to what I'm going to show to you, right? So you see that we have this internal range liquidity, right? That's we have internal range liquidity. We also have this particular QMR key level. So now let's say, for example, you are not the type of person that plays a setup directly. You always want to wait for confirmation entry because there are people like that. So number one, even if you have all this sweep, break, internal range liquidity sets, right? So let's say price begins to trade, take out internal range liquidity and tap into that your QMR key level. One of the things you can do for yourself is that you want to wait for how that current, like the 4-hour candle that taps into that QMR key level, how it is going to close. So let's say price taps into the QMR key level, comes down a little, then the next thing you want to see is you want to see how it closes. So if it closes above, right, the moment you see it close above, right, many a times you see it close not just above the QMR key level that it tapped into, you will see it close even above the internal range liquidity. So the same thing, the same factor again. Move one time frame lower from the 4 hours. Let's say this is for 4 hours. Just move one time frame lower to the 1 hour and also to the 30 minutes, right? Or the 30 minutes, 1 hour or the 30 minutes, and you are just looking for something like this. You are looking for an engulfing, right? The moment you see that price engulfs after you see that the 4-hour time frame has actually tapped into the key level and closed above, most likely you will see price just tap into this particular V-shaped key level and to just continue to fly, right? So many a times, what I was trying to say to us is that if you don't see something like that happen, another thing you can see most likely happen is this. Let me show you. So because price is actually giving to us a bearish momentum to the downside, right? Look at this. So because we are coming to take out internal range liquidity, so you see that for us to take out internal range liquidity, price is going to be giving to us a slow movement to the downside, right? So we're going to be having consecutive sales, more of sales, right, to the downside. So there's every possibility that you are going to see the same engulfing, right, but in a different pattern like this. So what you're going to see is that before this internal range liquidity was going to be taken, you will see that we are going to have, let's say, for example, 2 consecutive down candles, right? So the moment you see us have 2 consecutive down candles, it could be this last candle, right, that was responsible for this liquidity sweep and that led price to, maybe that was what made price let's say these 2 consecutive down candles were what was responsible for this internal range liquidity sweep. Then it was the third candle that was responsible for price, to tap into this particular internal range liquidity. Then on the 30 minutes, you will see that it engulfed. So you will see something like this. Just follow, right? So we had this engulfing like this. So now that you have seen that we have moved one time frame lower, we have seen that price has now engulfed, right? The next thing we are going to do is that there are 2 major places we should be looking to buy from, right? We have this V-shaped key level that was already created there from that closing price. We also have this open close, which is a key level here that price now disrespected. Because if you remember, we're actually moving to the downside, right? The order flow for the retracement was to the downside. But we know that what we wanted to see price come to do is that we want to see price take out internal range liquidity, tap into a particular key level that we're expecting price to tap into. Now, price has tapped there, rejected above, and when we move one time frame lower, either the 1 hour or 30 minutes, we now began to see that price actually broke. Price did not don't just pay attention to this little engulfing that happened here. Sometimes pay attention to the 2 consecutive down candles before the engulfing. You will see that these 2 consecutive down candles created for us what we call an open close, right? That open close got disrespected. Remember that same open close, we could use that same open close for even more sell continuations, right? We could use that same open close for more sell continuations, but only for price to do like this. Price broke above it with an impulsive move, closed above it as a body, and the next thing we saw price did was that the next candle tapped into that open close that got disrespected, and price will continue to move to the upside. So what could be the cause for many a times missed entries, right? I have my entry here, price tapped into the open close that is here, right? Even though we saw it engulf, I had my entry at the V-shaped key level here. Price tapped into this open close that got disrespected, right? And price just continued to move. So I say, oh, missed entry won't finish me this week, all of those kind of funny stuff that we always say as traders, all of those things. And only for me to just go back to my chart and study, and I saw that, okay, what price actually did was that this is a key level that got disrespected, right? price just took it out, price disrespected it, price came back to it again, and we just continue to move to the upside. So the same thing, let's say we had this week here, right? If I'm entering here, my stop loss is going to be below this particular low. Even if I was entering at this same V-shaped key level, my stop loss will be at this particular low. Maybe I'll just add a few pips just to give it some space to breathe, right? And all of those things. So you see that even if you entered here and price team wanted to go like a deep retracement, right, to the V-shaped key level, you are still safe because your stop loss is just going to be below the wick. So when we talk about building bias, right, we're not talking about you mapping out one POI, you know, all of those things. No, you can build bias from the current structure, especially on the 4 hours, right? So if you look at, this is what I'm trying to say. Let's say, just from what I just even explained, price has swept liquidity, broken structure, and we have something like this. So one of the ways you can build bias is to tell yourself that this is an internal range liquidity that needs to go, right? As much as you know that this internal range liquidity needs to go, now you are expecting a sell because you have seen a sweep of liquidity and a break of structure. So how do you build a bias from this? You don't just mark out any key level that is resting here, because when you look at this, we have the other flows to the downside. Why? We have broken below two major structural points. 1, 2. Two structural point has been broken below, so we know that the other flows to the downside. So I'm not just going to mark out any key level, I'm not just going to mark out any key level, right? So the next thing I'm going to be doing is that I want to see how this 4 hours time frame is going to take out this internal range liquidity, react from a particular key level. Many a times you might mark out an open close, right, that you want to see price react from, only for price to come to the QMR key level. But what matters is not where, you know, at that time. What matters is not the exact key level that you mark, you know, all of those things. Spot where the price came to, right? Let's say you marked out an open close key level, price traded above it, only for price to come to where the QMR key level like this. Let's say price came to this QMR key level, right? So what really matters is you can spot, okay, now we know that price has taken out internal range liquidity. Price has also rejected from a QMR key level. What now matters to us is how the candle closes, right? How did the candle close? We tap into the QMR key level. In this type of situation, because of how far price went, price might not have enough strength to come to take out, you know, enough time, not strength now, to take out, you know, close below this internal range liquidity. Many times you just see price take out, you know, take out internal range liquidity, tap into a QMR key level, and, you know, price is just going to close below it like this. So the moment price closes below it again, what do? Just move one time frame lower. It's simple. Move one time frame lower, move to like the 30 minutes or to the 1 hour, right? And you're looking for simple thing, an engulfing. So there are several things you will see for an engulfing, right? The moment you see price that's engulfed, it will create for you an A-shaped key level. So one of the type of price action you're going to see is that after price has engulfed and created for you an A-shaped key level, the next 30 minutes candle or 1 hour candle will serve as internal range liquidity, which means that we want to see price take out this particular internal range liquidity and continue to move to the downside. If price doesn't give to you this type of price action, the next thing you're going to see price give to you is that we will see what we call an engulfing. And after an engulfing, price will directly just tap into that A-shaped key level created, and it will continue to drop. And if you don't see any of these two, you are likely going to see this third one. The third one is what I spoke about. You will see what we call consecutive up candles. Consecutive up candles that will create for us an open close, right? Instead of price to respect the open close and continue to buy, we are going to see what we call an impulsive move to the downside. That impulsive move to the downside, we still engulfed this particular candle, but it makes a lot of sense now because we didn't just engulf, we broke below this open close. So there's every possibility, like a 70% chance that price might not come back to this V-shaped key level again, right? Price might come back to this open close that price now broke. We still engulfed here, right? But the logic is not just in the engulfing. We see two consecutive candles to the upside that created for us an open close, which is the key level. Now the price has broken below it. So there's every possibility that price will tap into this particular key level, open close that got disrespected, and price will continue to move to the downside. So if you do not see an engulfing where the next candle serves as internal range liquidity, you will see an engulfing where price just taps into it and continue to drops, or you see an engulfing where price breaks below the open close with an impulsive move to the downside or upside. Price will play that open close that was disrespected, and price will continue to move to the downside. Do you understand? Right? So we're still going somewhere, Sha. So if you look at what is happening here, right? So if you look at, I'm selling this guy, right? It has, in fact, the guy did 1 to 8 from my entry, but I just went break even. I just left it and went break even. So if you look at what price did here, this is the daily time frame. You can see on the daily, if you move to the daily, you can see we've swept liquidity on the line chart. We also broke structure, right? But this is where I want to show you something, right? Look at this. We took out this internal range liquidity, right? If we investigate all of these candles that you see on the daily time frame, you will see that this reaction that you have here, right? Let me show you something, right? Because I was not on the chart when all of this react. Let me take out this magnet. It's giving me issues. So I was not on the chart when all of these reactions happened, right? I just saw it. So you see that all of these reactions here that you have on the daily, if you move, let's investigate what price is actually doing, right? Salem Osma. Yes, he said that is my favorite. You can see. I mean, that is the uniqueness. Should I use the word uniqueness or the blessedness? I don't even know which one to use, so I will not sound too pastoral, right? Of what we teach here, right? You will see that what has given Dixon more win rates is just this simple continuation model. Price breaks above a key level, creates an inducement liquidity or not. Price comes to play that key level that is overlapping with an imbalance. And you see Dixon playing only this model over and over and over again. So Salem says this is his own model, right? Where price just, engulfs and all of those things. So back to what we are saying, let's investigate. So if you investigate where price is actually reacting from, you can see on the daily time frame, where price was actually reacting from was weeks. But when we came to the 4 hours time frame to see the exact place where price was reacting from, right, we saw that this is a 4-hour key level, right? This is like a 4-hour key level that price just kept dancing and dancing around, right? So if you notice something, what did you notice here? We took out internal range liquidity. You see, you are not doing so many things. After internal range liquidity is taken, right? How did this candle close? It closed below. So it means that we should likely be looking for more sales, right? So, but you see what price did? Price came again, traded above it, right? Then the next candle engulfed, right? This is where patience comes in, because as you saw the price close above it, you might want to say you want to start looking for buys, right? But even if you want to look for buys, you must be patient enough to wait for that entry, right? You must wait for a proper confirmation. So what did you see price do here? Tap into it. We took out internal range liquidity, tapped into the 4-hour key level, close below, right? We must jump one time from lower to continue to look for selling opportunities. So what do we see price do here, right? On the 4 hours time frame, you remember we are coming from the daily. On the 4 hours time frame, you can see this engulfing. So what did the engulfing create for us? An A-shaped key level, right? Look at how price did not go below or above that A-shaped key level, right? So look at this. So look at this. Tapped into that 4-hour A-shaped key level, engulfed again. We kept playing around that same spot. We kept playing around that same spot. Then how did I join this particular sell? Let me show us how I joined this particular sell. My stop loss was very little on the 1-hour time frame. Oh, why is it not loading now? I hope we are learning, sharp. I hope we are learning. Let me show you how I joined the one. Let me show you how I joined the sell, right? I want to show you guys how I joined the sell. My stop loss was very tight. Not like very tight. It was a little bit, just a little, right? Why is 1-hour time frame not coming up now? I don't know why 1-hour time frame is not coming up. Okay, but since 1-hour time frame is not coming up, I think I have an idea of what I'm just going to do. Let me just use 2 hours. So you see on the 2 hours time frame, you can see I entered at this. Okay, it might be network, I guess, but okay, let me try 1 hour again. I don't know why it's not coming up. Oh God, what have we done? What did we do to 1 hour now? Let me just use 2 hours. Let's use 2 hours because I'm still seeing the same price action on 2 hours. So it's still the same. Okay, reload the site. Okay, let's reload. Thank you for your patience, everybody. Let me reload. So you see, I have more hopes, right, that this guy is going to go to the downside because on the daily, we have already broken structure. We sweat liquidity, broken structure. We might want to come back to this low, at least this old daily low. Let's take it out, right? But that's not my business, right? So, but on the 1 hour time frame, so this is what I did. Okay, beautiful. So this is where my entry was on the 1 hour time frame. So you will see, it's when I checked price, the price was here. Please mute your mic. So when I checked price was here, right? So it was very simple. I didn't even do so many logic or anything. I just marked out my open close key level, right? I didn't even mark out this inducement liquidity, right? I knew that this was going to serve as our inducement liquidity, right? But I didn't mark it out. The only thing I just marked out was I just marked out this open close key level that is resting here, right? After marking out the open close key level, my stop loss was very tiny here, like this. It was just here, right? I just wanted to just try something, right? So, and only for me to just come back and check, price was already here, right? And you can see price is reversing. So what I'm believing is, I still believe that price is going to go much lower because on the line chart, you can see we already broke structure here, right? We broke below this particular low, which means that body to body, we had a break of structure, body to body. On the 2 hours to the same thing, right? So which means most likely we broke below this one. So most likely we might want to get another entry opportunity at this A-shaped key level. A little tight stop loss again until I want to even see all of these lows go. This is this low. I want to see this one. This one is what I want to even see go. I want to see this particular low go. That is my own concern. That is where I want to see go. Right. So this is the low I want to actually see go. So in fact, I wanted to join this buy yesterday, right? When I got back yesterday, when I opened the chart, that was the first thing I saw. But I wanted to see this low. I wanted to see this one take out. I wanted to see price come to take out this particular low, play out from a particular key level here, this place here. But price didn't get there. But if you look at what price did, right? Look at what price did. I want to show us what price did. So you see how we engulfed here, right? You can see we had like 3 consecutive down candles to the downside, right? What did you notice? We engulfed, broke above this particular key level. You can see this is an A shape. This is an open close key level, right? Don't pay attention to all this price action that is happening here. No, that's not your business. So you can see what I just explained to us, right? We had these 2 consecutive down candles that created for us open close. So price did like it was going to tap into it, but it didn't tap into it. But you can see we had that impulsive move to the upside that broke above the key level. Now, in fact, I was just waiting around here. This was where my entry was around somewhere here, right? I had a key level around that area, right? Because I wanted to see this low taken, right? I didn't pay attention. I was already asleep, safe. I didn't see all of these things play out. So this was already a key level, open, close key level. Price engulfed this, but overall, it makes a lot of sense to us because we broke above this particular open, close key level. If I was awake, right, naturally would have been expecting price to come back to the V-shaped key level, right? Is this not the V-shaped key level you should be expecting price to come back to, right? So where did price come back to again? Look at this. This is the open close key level that price broke above with an impulsive move, closed above it as a body. Price came back there, tapped into it. And what did I say? When a key level is right, momentum must kick in. So what did you see price do? Tapped into it. 1, 2 was preparation. The main momentum came in at the third move. Boom. Where did the second entry come in from? Open close again. This is the next open close. Second entry, tap into the open close, and the third candle straight up trying to take out all of this liquidity that we engineered. Are you seeing now? So you can see that what I just explained to us is what VIX 25 did yesterday, right? So what I'm saying is that many times you are going to see price, right? After price takes out an internal range liquidity, if you want to wait for continuation entry, I bet you, I can tell you for sure that, see, trading is simple, right? I know that capital might be the issue, but don't let capital be the issue. It can be an issue, but don't make it be the issue, right? Just follow these things that I'm showing you. So what I'm trying to say to you is that confirmation entry after price takes out or let's say an internal range liquidity, or price takes out reject from a particular key level and you move one time frame lower. The moment you see 2 consecutive candles to the downside or to the upside, right, that creates for you an open close, and you see candle like this, we broke below it. 2 things should come to your mind. Number 1, we engulfed. Number 2, we broke below this open close. there's every possibility that price might not come back to the A-shaped key level created, which is the extreme. It means that there's every possibility that price will come back to something like this. This open close that got disrespected, right? That price broke and closed, and price will continue to move to the downside. So what do you want to do? If we have something like this, internal range liquidity, price took out the internal range liquidity, we are moving one time frame lower to just look for something, either an engulfing that has an internal range liquidity or an engulfing that's created for us an open close that got disrespected. Are we getting what I'm saying? Is it making sense? Is it making sense? So look at this. Look at where we are now. Look at this. This could serve as an extra another entry, right? This is an open close that price created, right? This is an open close that price created, right? 2 consecutive candles to the upside, price created an open close, disrespected it, closed below it as a body. You can see how price is rejecting from there. It means that there's every possibility where we might just continue to see more sales to the downside until this particular low even goes. Mm. Do we see, you can see the simplicity of what we do, right? Very simple. We're not doing, it's not complicated. What we do is very, very simple. What we do is very simple. So if you build your bias, right? Oh, sorry, somebody is, let me quickly attend to, so please stay on the call. So you will see that, okay, let me just, so one of the things you would actually notice is what I was trying to say to us is that if you build your bias from the weekly, build it from the, okay, let's look at GU. So GU is a very good example of what I want to show to you guys now. So when you look at GU, let's start from the daily. So I want you to see what I just explained to you on the daily time frame. This thing is, see, you can take losses, so, but I assure you of your win rates, right? I am assuring you. What do you see here? 2 consecutive candles to the upside, right? So, okay, let's start from here now, right? I've taught you how to build bias already. Candle closures matters a lot, blah, blah, blah. Pay attention to price now. 2 consecutive candles to the upside. Price broke below. Now, we didn't engulf, but you can see we had a break of structure to the downside. So what did you notice when you look to the left, right? Pay attention to this first place. This is an open close that price tapped, got disrespected. Now, where did price come back to? That same key level. Tapped into it, momentum kicked in. For 2 days, we sold straight. Are you seeing now? So what are we expecting next? What happened today? Now, this one now, we had this old daily high, internal range liquidity, right? 2 consecutive candles to the upside. This time we engulfed and we broke below this low, right? If you move to the line chart, you can see how we broke below this particular low. So what did you notice? We have these 2 consecutive candles created for us what we call an open close. Are you seeing how price came back there again? We could still want to wait at this V-shaped key level, right? If you wait at that V-shaped key level, it's a missed trade. Can price go back to the V-shaped key level? Yes, it's price. It has a mind of its own. It might want to do whatever it likes. Do you understand what I'm saying? But look at what price did here, right? Look at this. Look at this. 2 consecutive candles to the upside. So here is the complete logic to it, right? But you will not see us painting our chart like that. We swept liquidity, right? After the sweep of liquidity, we broke structure. So I'm training you to see specific areas that you can treat as what we call point of interest, right? I'm training you to see all of those things. So you can see sweep of liquidity, break of structure. We didn't engulf, but when you look at the structure, we broke below it, right? So we should look for, it makes more sense to look for more sales, right? Good. So how many key levels here would you be anticipating? You have this A-shaped key level that is here 1. You have this open close here that is here too. But overall, here is the main key level that you are expecting. 2 consecutive candles to the upside that led to sweep of liquidity. Impulsive move, broke it. Simple, no long story. We had an open close here that price tested once, but now it was broken and disrespected. Boom. That same key level. Tapped into it, momentum kicked in, and we continue to move to the downside. The same thing repeated itself again on GU. Look at this. Internal range liquidity is resting here. These things happen on the VIX. It happens everywhere. Crypto, go and test it. Forex, everything. 2 consecutive candles to the upside created for us an open close. Price disrespected with an impulsive move to the downside. Where did price come back to again? This is it now. Open close key level. Tapped into it. Look at this. On the daily. On the daily. Are you seeing? Open close key level, 2 consecutive candles. Price tapped into it, was respected. Broke below it as an impulsive move to the downside. What did you notice here? This is an imbalance here. Can you see how that open close is overlapping inside of all of this? Tapped, we're just selling. We just kept selling. Today, again, the same thing. We just kept selling. We just kept selling. Are you seeing that? Are you seeing how it's making sense for us now? Is it making sense to you? Is it making sense to you as well? Oh God. Are we still together? Is it making sense to you? Okay. It must make sense to you. Somebody has a okay. Let's take questions. Anybody who has a question. We have about 10 minutes left. I wish we could stay here till 5. We can do it though. Who wants to do it? Who wants to
We can do it. We can do it though. Okay. Good evening. I have a question.
Yes, please go
Thank
ahead.
you so much for your explanation so far. It's getting clearer and clearer. And I think one thing I got tonight that I didn't get before was the open close key level, and like its relevance in terms of the engulfing. So I think one thing I'm currently struggling with is stop loss placement.
Okay.
Because the way you explain it, I know you have attained a level of mastery. So the way you kind of explain it, I don't always get a standard, would I say, mechanical logic to stop loss placement. So how can we go about that apart from saying maybe 10 pips or stuff like that, which sometimes you say? Is there another mechanical, would I say, method that we could use for stop placement?
Yes. Okay, who is asking?
We are not using confirmation entry.
Okay, Mr. Olu. Okay. Yes, yeah. Okay. Yes. So it's what we can do is that let's do this. So we're going to use this as an example. So let's say, for example, I'm trying to look for one that is very good. So for me, I would love to just do 1 to 4, 1 to don't mind me. All right. So I don't know, what I'm saying. Okay, I don't want to digress, but let's just continue. So now, mechanical placement. So for example, now we have price that's tapped into this particular key level that is overlapping inside of this imbalance. Price that's created for us this A-shaped key level. We didn't engulf, it just created for us A-shaped key level, tapped into it and started to drop until this low was taken, right? So in this type of scenario like this, my stop loss will just be my stop loss is supposed to be here, right? But I will just add 1 more pips to it, right? Just to give you more space. I believe that if the same key level, because this is the flexibility that comes with how we trade, if this key level gets disrespected and it closes above it with an impulsive move to the upside, right? I'll switch and look for more buying opportunities from that same key level again. But now we're just talking about key placement, stop loss placement, right? So in situations like this, instead of my stop loss to just be a little bit above the wick, I'll add 1 more pips to it, right? Just to make it be a little bit below. In fact, EU almost took me out. EU almost took me out because my stop loss was here. You see where this cross line is? It was here. Normally, let me use it. This is a good example. So my stop loss was supposed to be here, which is not a bad place to put your stops because my entry was at this V-shaped key level. So my stop loss, let's say, let's use this as an example now. I think this is a good example for us to use. So if my stop loss was supposed to be here, you can see that it's still fair. This is a 7 pip stops, right? So, but I just moved it here. I just moved it here to about 5 pips. And it almost took me out, right? It almost took me out. It was about 5 pips, right? So we have a 1 to 3 already. So, but it was about 5 pips. So I just believe that if price closes below it, right, with an impulsive move, we might just continue to move to the downside, considering all of these liquidities that are resting here. But ideally, where we should place our stops in situations like this is just below the low, below this particular low, right? Below this particular low. So the same thing applies if we have an origin of a trade. We have a sweep, we have a break, internal range liquidity, QMR key level. We are playing above this QMR key level. The ideal place to place your stops is just going to be above this particular high, right? Just place it above this particular high to give it some space to breathe. But me, I love it to be more adventurous, right? I just believe that 10 pips is fine. So for example, if I'm taking a QMR key level in this type of place now, and my stop loss is supposed to be above this player, and it's showing me 15 pip stops. So I'm trying to look at how long is it going to take to hit 1 to 3, man. It might take very long time. So my 10 pip stop might just be it might just be somewhere around, right? I would just prefer to play the 10 pip stops, right? Or many a times I could just put my stop loss at the A-shaped key level. So what I'm trying to say is that I'm trying to let myself know that there's every possibility that price will tap into my QMR key level, hit my stop loss, which is the V-shaped key level, before it continues to drop. So it teaches me something when I'm coming back to the market next, that it's always safer for me to put it above, that high, the strong high that was actually created. So it teaches me, and it teaches me that as well. So ideally, when you catch an origin of a trade, just put it above, right? And write it down. Give it more space to breathe, right? Give it more space to breathe. But if you catch a trade like we call the continuation, like this price breaks above it, we have a key level that is overlapping. I don't know. I just use 10 pips, max 10, 11. Because I can't imagine myself putting it below this low, right?
Yeah. Oh, okay. I used 10 pips on there was a USD card I caught last week and it worked.
Yes.
And the next trade it didn't work and that level was actually disrespected properly. So I think generally, yeah, that works. But today I tried on gold.
Okay.
I think there were 2 key levels. So I entered on the first key level with the stop above the second key level, where there was still another high. So price kind of moved through the 2 key levels and then went to the high. If you see it on is this gold?
Yes, this is gold and this is Saxo. I have 2 gold. I have this Saxo broker and I have this major other broker. And the reason is because this Saxo broker is this is a broker that is consistent for MT4. So let me use this one.
Oh, okay. If you look at it on Forex,
okay. Nobody should go. So we have XAU. Okay, so we use forex.com.
Yeah, I think I use forex.com.
Okay.
Let me see.
Yes.
Oh. Okay. Apparently I use Saxo. Sorry.
You use Saxo, yeah?
Yes, I use Saxo. I have to follow the mentor back to back.
So I use Saxo, right? So this is Saxo.
Okay, so I think I was on the 1 hour. I could see that price took out a QMR level from the left side, a 4-hour QMR level. If I'm reading it right. Then I entered at, so what I could see like what looked like 2 key levels to me. So I entered at the lower one and then put my stop loss above the higher key level, the actual A-shaped key level.
Is it for this sell?
This sell, yes.
Okay,
so you can see that price came close to that high.
This one, yeah?
Yes, that one.
Yes.
So if there's more like a open close at the bottom of that that little range there too.
Oh, what?
Can I annotate?
Yes, please go ahead and annotate.
Okay, this is what I'm referring to, this place here.
Yes, yes, yes.
So I just set my limit here, put my stop somewhere. I think to somewhere above this high. So somewhere here,
It took you
you
out.
know. Yes, price took me out, and then so that got me thinking more in terms of probably putting my stop above.
Yes,
You know,
you know what?
just
It's always best. See, okay, let's do it like this, right? Because there are times the market is funny, very funny because it's because of its dynamic nature. As much as you can have sniper entries, you can also have sniper stop loss, meaning that price will snipe your stop loss and immediately snipes your stop loss, it will start to dump. So you're just going to know what happened. So the thing is, one of the things we can do for ourselves is if my stop loss is supposed to be above this high, just add one more pips to it. Just add a little more pips to it. Right. So stop loss is just put your stop loss above the high, add one more pips to it or 0.5 pips to it, and we are good. And we are good for real. For real, we are good. Any other questions? Should I send another link? Or we should just call it a night? I'll see tomorrow. We have about 30 seconds left for this session to end. Okay, let me end this one so that you can start converting for us.